Prepare yourself for an exciting journey as we explore the mind of George Soros, one of Tesla's biggest and most contentious investors. While investors have been in a frenzy due to the recent price changes of Tesla stock, Soros has not been affected. He is boosting his assets in the massive electric vehicle company in order to take advantage of the decline. It's time to see why Soros has been following the less traveled route and piling into Tesla shares when so many others have sold their holdings out of fear. Come along as we examine Soros fund management in further detail, as well as the visionary investor and philanthropist George Soros. Will you sell your possessions to accompany him on his journey? You have a choice, but first make sure you subscribe and hit the like button. Given the recent fluctuations in the price of Tesla stock, you may be debating whether, like George Soros, you should sell your holdings to the highest bidder or keep buying shares in the hopes that the stock will continue to rise dramatically through 2023. Anyway, good to have you back in the game. With the market dropping 50 points and Tesla stock experiencing severe volatility for an extended period of time, investors have many unanswered questions. In spite of this, it appears from a recent regulatory filing that renowned investor George Soros seized the opportunity presented by Tesla's decline earlier this year to pile up Tesla shares, tripling his holding in the company in the last few months. This is in contrast to a large number of other investors who, fearing a loss, have sold and continue to sell their shares. George Soros started the family office Soros Fund Management, which oversees more than $28 billion in assets using a range of investing methods and asset classes, including public stocks, fixed income, commodities, foreign currency, alternative assets, and private equity. The Tesla investor's net worth increased by $1 billion from November 22nd to $8.5 billion, according on Bloomberg's Billionaires Index. Soros is highly renowned for his charitable endeavors. The lion's share of the money made by his company is donated to Open Society Foundations, an organization that supports activists worldwide. It appears that Soros initially purchased Tesla shares between April 1st and June 30th, as he reported his interest in the company in the second quarter. The investor in Tesla had 29,883 shares at that time, valued at $20.1 million. As per an SEC filing, the company initiated its largest common stock issuance, which was neither an option position nor a merger target. In the first quarter of 2018, George Soros Investment Company made a substantial acquisition of Tesla bonds, solidifying the company's position as a major supporter of the automaker. $35 million was invested in convertible notes bonds that have the potential to be converted into a specific number of common shares by a group of investors known as the Soros Fund Management Group. The family office has been a long-time shareholder in Tesla common shares, with a substantial increase in that investment in recent years was a surprising revelation. The sole acknowledged holdings as of June 30th, 2022 were 355,250 shares, but as of March 31st, 2022, the only indicated holdings were 2,000 shares. Soros tripled his holding in 3 months and now owns 89,647 Tesla shares valued at $16.4 million at the market price of $183 USD, according to a regulatory filing. Even if Elon Musk, the CEO of Tesla, has recently seemed to be obsessed with Twitter, this will also change. Although the price of Tesla shares has fallen this year and then surged, there are concerns that the manufacturer is facing a drop in demand in a number of markets. Tesla's business has always been doing well, despite fluctuations in the company's stock price. Longtime Tesla bear Citigroup has released a fresh note, indicating that the electric vehicle manufacturer would probably be eligible for a tax credit in 2023, which will enable it to overtake competitors in the market. As capacity increases in a hard landing scenario, macro competitiveness worries are likely to remain an overhang, even though the producer of electric cars stands to benefit from the Biden administration's inflation reduction legislation, according to Antonio Migliaccio. In addition to strengthening Tesla's long-term competitive position, this tax credit will help reduce inflation. Recent speculations claim that Tesla is moving engineers and production staff from its California facility to Vermont in order to start automating the production of electric vehicles, EVs. This move is expected to enable the company to produce cars at a lower cost and increase demand for them in the future. Tesla has previously deployed cutting-edge equipment at its Fremont, California plant in an attempt to boost output at its American location. Tesla's production lines are highly automated, which has allowed the company to significantly increase output at its Shanghai factory. Tesla is credited with delivering a record 83,135 vehicles in China in September thanks to the Shanghai upgrade. This procedure, which included various other modifications and mechanical maintenance, took roughly 5 weeks to complete. Therefore, Tesla could greatly boost output by duplicating the same modifications from a single location. The manufacturer of EVs has previously stated that over the next few years, output will rise by 50% on average. The large quantity of EVs is one factor that might outpace demand for Tesla. EVs are steadily upending the gasoline industry, and as gas prices climb, more people might look for less expensive options. It is evident that Tesla outperforms other EV manufacturers in terms of profits when comparing their EVs. Despite being outsold more than 7-to-1, a recent report claims that Tesla made 8 times more profit per vehicle during the July-September quarter than Toyota Motors. Despite selling 7.6 times as many automobiles as Tesla, 344,000 in the quarter, the Toyota Group's net profit per vehicle was significantly lower. For the first time since going public in 2010, Tesla's quarterly net profit surpassed Toyota's. Like any manufacturing business, Tesla will occasionally see significant changes in its profit margin as it works to keep up with the growth in global production, exhaust gas turbochargers, and traffic. Additionally, Tesla may have steadily increased its concentration on KPIs like profitability per car sold and free cash flow. The most recent discussion between George Soros and Tesla may help the firm become more visible to potential investors. The investor is not alone in feeling optimistic about Tesla and its stock. Despite the company's recent setbacks, their opinions are typically shared by analysts who have been monitoring the electric vehicle sector generally. In a recent interview, American fund manager and investor Ron Barron projected that Tesla's market value would reach $4.5 trillion by 2030 and that the company's shares would be worth $500 to $600 by 2025. The stock analyst had connected the annual production of Tesla cars to his price goal. His main point was that Tesla might grow its business tremendously in the next 10 years and eventually begin selling about 20 million cars annually. We believe Tesla's gap to competition can potentially widen, particularly as EV prices pivot from inflationary to deflationary with respect to the IRA, stated Adam Jonas. Despite the risks associated with Elon Musk's Twitter activities, Tesla investors can still expect the company to grow sales by roughly 37% in the upcoming year. Not only has Tesla piqued investors' interest, but we believe it is the best-positioned OEM to obtain product action credits and consumer tax breaks. If Soros purchases a sizable portion of Tesla's shares, fund management teams might also get interested in making an investment in the company. The stock market mandates that managers of funds holding more than $100 million in U.S. equities adhere to a document known as the 13F within 45 days of the end of each quarter in order to list their holdings and securities trend changes. Soros Fund Management, a family office that manages both public and private equity, is in charge of managing the investors in Tesla. With Tesla now listed in Soros Management Fund's 13F filings, additional investors will be able to offer feedback based on Tesla's fundamentals rather than on sporadic price movements. The U.S. equities portfolio has recently expanded by 4.3% quarter over quarter to over $5.9 billion. What are your thoughts then? Please share your thoughts in the comments section below. If you enjoy the video, don't forget to hit the like and subscribe buttons. In the upcoming video, I'll see you. Music.